If you've ever wanted to generate income, then selling options is one of the best possible ways I know. It's literally like printing money. It's dividend on steroids. And a lot of people just don't know where to start. Selling options consists of covered calls and cash secured puts. And in today's video, we're going to talk about cash secured puts specifically for the stock rklb or Rocket Lab Corporations. It's an absolutely sizzling hot stock that I put out a notification today to my website and a play that I personally sold cash secured puts on. In today's video, I'm going to explain to you how in general I pick cash secured puts, but more importantly, how you can really hone in on a situation where you sell a cash secured put. And in this case, there was a huge opportunity with what happened with Rocket Lab that consists of dilution to raise funds, which in turn gave us a massive drop in share price and therefore gave me a massive opportunity to sell cash secured puts and print some money on cash secured puts for Rocket Lab. I'm going to show you my screen in just a moment. But before we go any further, if you want notifications, if you want weekly lives, if you want cool apps like an options calculators and demos like Excel sheets and technical analysis, I have a link down below in the comments section to my website, retiredasap.com. If for whatever reason whatsoever you don't like it within the first month, just email me anytime and up until the last day of the month, tumstrpltr@gmail.com, and I will refund you 100% of the money, cancel your membership, and no questions asked. I won't ask you a single question, no BS, 100% refund, money back guaranteed within the first month if you don't get any value from my website. With that said, I'm about to share my screen in just a moment, but let's just go over the basics of cash secured puts, and then I'll go into specifics for this play and nuances of why I picked it. In general, when you're selling a cash secured put, you are saying that you are willing to secure a put with cash, saying I am willing to buy shares at a certain price called the strike price at a certain date called the expiration date. And the downside is if you say you're going to buy X stock at $100, but X stock is at $95, you still have to pay $100. This is not taking into account any management or rolling or wheeling of the stock. Rolling video is up above, and after that, you could watch this wheeling video up above for a little bit more nuances when it comes to managing options, and then come right back here. Selling cash secured puts is the opposite of somebody buying puts. When somebody buys a put, they pay a premium. That premium is collected by somebody who is selling the put. Essentially, anybody that buys a put is buying protection against their shares, and you essentially are the dealer, the house, the casino, the bank, whatever you want to call it, selling the cash secured put. While it doesn't exist that there's no such thing as risk, in this case, there is opportunity risk, and it's minimal risk with moderate returns. In general, I seek to sell roughly 4 weeks out. The golden rule is 4 to 6 weeks that most people will agree on. I go 4 weeks out, 80% in my favor, and I like to be at a 20 delta or less, 0.20 delta or less. And for this, if it's a viable play, I like to collect minimum 2% on my money, which means if I put up $100, I want to collect $2 in premium, and I do this monthly, rinse and repeat. If you don't know who I am, my name is Adam Bergman. I retired last year at the age of 41 years old. I believe in 3 pillars when it comes to my portfolio and my retirement. Pillar number 1 is multi-baggers, where you multiply your initial investment, coined by a guy called Peter Lynch, legendary investor, legendary name in Wall Street. He coined the phrase multi-bagger. So I'm always looking for multi-baggers, and this is what got me to my point today where I was able to retire. I still hold around 10% of my portfolio in multi-baggers to accumulate wealth. Part 2, pillar number 2 of my plan is high-paying dividend yield stocks. I have a link up above for a playlist on dividends where I am able to pay my monthly bills, my mortgage, my car payments, my utility, my food, so on and so forth. The basic necessities of life need to be covered by my dividends. And then part 3, which I talk about on this channel right here, is selling options to supercharge my retirement, to allow me to buy the nicest things in life, not just the bare minimum ramen noodles, but a nice steak, go to vacations, pay for my kids' school, so on and so forth, if you get what I'm saying. You dig? With that said, that is the basics. Let's go look at a play that I went over earlier, and then I'm going to go into technical analysis, how to get into a play, how to really hone in and pick your strike prices, and how things in the market, the fundamentals or the micro of the specific company also matters big time when it comes to picking. And this is how I got into Rocket Lab, because I don't like to sell cash secured puts on stocks that ran up like crazy. But today was an opportunity after the stock ran up nearly 100% year to date and multiple hundreds percent over the last year. Take a look at the screen. This is the play in question over here. This is Rocket Lab. As you can see, Rocket Lab literally shot up like a rocket, almost 100% year to date. And over the last year, it shot up 540%. It's absolutely astronomical. Crazy, crazy, crazy. So I sold this cash secured put right here, which is a $39 cash secured put, which is expiring for 10/10. And I collected 79 cents for this contract, which says I am willing to buy Rocket Lab at $39 if it hits $39 on or before October 10th. And for this, I collected 79 cents. Now, if we do the math and we go to my website, let's go into the toolbox. You get all of this by being part of my website. Let's go into the options calculator and calculate how much percentage I made. Let's go to Rocket Lab, RKLB. Let's fetch the price. Let's do the strike price of $39, and we collected 79 cents in premium. And let's calculate based on the 4-week run. Calculate. So we collected 2.02% on this play. Annualized, it will be 24%, actually a little bit less because today is Tuesday. Yesterday was Monday. So it's not a full week, but let's just call it a full 4 weeks. Not bad, right? It meets all of my goals. Now I want to go into, again, the website, and I want to post and show you what I posted earlier. So I made 2 posts earlier today. The first post was actually an Oscar setup, an Oscar play, which I can go over a little bit later. People absolutely killed this play, but the other one was this play right here. I said that I did this play, and then I explained why I did the play, and I'll go over it in just a moment. You see, Rocket Lab ended up having a $750 million dilution. However, this is only about 3% dilution. So for a 3% dilution, Rocket Lab today was down 12%. Because the dilution is 3%, Rocket Lab is down 12%. This gave me an opportunity why I even looked at this stock. And then I go in why I did this. And I'll go over the technicals in just a moment. $39 strike is well below the 20-day moving average and the 50-day moving average, which all starts and acts as support. Absolutely huge. Huge volume lines at $45. I'll show you the screen in just a moment. And worst case scenario, it is just above the 100-day moving average and below the bottom of the Bollinger Bands, which might be just the most important of all the indicators. And then I go over highlights of the offerings, what it meant, what is it for, so on and so forth. And like I said on my website, I give you all of the technical analysis, explain what the technical analysis is for, so on and so forth. But let's go over the numbers really fast. This is Rocket Lab. Remember, Rocket Lab went down 12% on a 3% dilution that's going to be used for their new rocket launch, for money for their rocket launch, so on and so forth. First of all, anytime we have something that goes on like this, we're outside of the Bollinger Bands, this means that it is way overbought and that the price is probably going to cool down. And we got today's cool down by this massive, massive red candle. The Bollinger Bands means that it's a standard deviation of 2, which means it's a 95% price movement over the amount of days. I set my days up for 30 days. So anytime it's outside of the Bollinger Bands here or here, this is only a 5% out of 100% price movement, which means in general, anytime it goes out of these lines, it's supposed to be out of bounds and gets back into bounds, which is exactly what happened over here. Next, if you look over here, it is right abutting the yellow line, which is a 20-day moving average, the orange line, which is the middle of the Bollinger Bands, and the green line, which is the 50-day moving average. All of this makes a lot of difference. And then you have this absolutely massive, massive volume shelf right here, and a pretty massive volume shelf right here, right at where it's about to stop. So after all of that, The bottom of the Bollinger Bands is right here at this 39.50 level. So we decided to sell a cash secured put right here at the $39 level. Worst case, like I said, right here at the 100-day moving average, we're at 36.34, which I think is max pain, although I don't think we're going to get there. So based on everything that I showed you, we came in and did this play for $39. I actually tried to get more of this play, but it got canceled. As you can see, I actually tried to sell another 25 of these because towards the end of the day, it was actually paying 95 cents and I only collected 79 cents. However, it didn't fill. And you could see I tried to get it right here as well, even 99 cents. Again, it didn't fill. I tried to do a last minute at 3.59 and 3.59. It just didn't end up filling, and that's okay. Let's go through exactly how I did this. If you want to sell an option, you go right here for trade options. And then instead of buy, you press sell. Instead of call, this would be a put. And then I go 4 weeks out. Let's say this is a full week. 1, 2, 3, 4, October 10th. Automatically, I'm going to go to something that says 80% in my favor. At the time, I believe this was like 80 point something percent. And when I click on this, I want to see under 20 delta, like 0.20. This is 0.15. I believe it was like 0.17 at the time. So I ended up selling 50 of these contracts. I ended up collecting 79 cents. For selling these contracts, I ended up collecting on my money a quick $3,950. Now you're going to ask me, well, Adam, that's great. What happens now? What happens now is simple. Now you know how to pick strike prices, how to pick the dates, what you're looking for, basic technical analysis, how to look at a kind of micro event for the fundamentals of what's happening with the company, and realize when there's potential that the 3% dilution caused a 12% dip on the price. Regardless of what happens and how this plays out, this was a very viable and good play. As of the data that we have today, nobody knows what's going to happen later. When I manage my options, it's quite simple. I wait until the last week, Monday or Tuesday of the last week expiration. So I set it and I forget it. What does that mean? These expire on the 10th of October. So I'm not even going to look at this until the last week, which I believe would be October 5th or October 6th, something like that, Monday and or Tuesday. That's how I would realize if I want to roll this, if I want to wheel this, if I want to buy it out, if I don't want to do anything at all, so on and so forth. Every single case is completely different. Some people ask, Adam, what do you do with the money that you make? So I make $39.50. I'm going to literally take half of that and pay myself my salary, and the other half I'm going to put away for taxes. When I put away for taxes, I usually buy short-term treasuries, keep the money in there, and when it's time to pay the tax man, I have the money ready. While it's in there, it offsets a little bit my taxes because it pays a distribution. I'll usually do a stock called BIL or SGov. Take a look at the screen. This is BIL. It's a 1 to 3 month short-term treasury bill from the United States government. And as you can see, the price really doesn't move. It goes as bottom as 91.45, and at top it goes 91.75. It does not really move. And the next stock I will do is SGov, which is similar. Instead of 1 to 3 months, is 0 to 3 months. And the same thing, it barely moves. The bottom was at 134 cents, and the top was roughly 168 cents. By investing in these, this is like holding cash, except it's offset by a distribution. It pays roughly 4.5%. And most importantly, no city or state taxes, which therefore even more so offsets the money that I'm making, the money that I put away, ready to pay taxes. If you're going to be doing this professionally or trying to do this as a supplementation to your 9 to 5 or funding your retirement, you need to treat this as a business. You need to be absolutely militant with this. You have to have parameters like I do, and you have to explain every single play. It's not going to come easy at first, but after doing thousands of these, it's going to be easier for you to explain the play the same way that I do it. But you only get to my position by starting, and a lot of people are scared to start. I hope this video gave you some type of rules of thumb. However, this is not advice. I'm not a financial advisor. I am really just an entertainer. This is all purely for entertainment, and none of this is meant to mimic, use, or perceive or take as advice. At the end of the day, we all are grown adults and we all do what's good for us. Please join my website if you don't like it for whatever reason. Full money back guaranteed within the first month. You cannot get a better deal than that. Our next live is going to be Monday or Tuesday this coming week, where we're going to have live during market hours, Zoom style, where we can actually discuss. And we have around 25 people that log in. It's really, really cool. Every single question gets answered. Nobody gets left behind. Whatever you do, do not click subscribe. All I ask you is to click on these videos right here and continue to digest and gain knowledge. Thank you very, very much. And God bless you and your family.